From Ticker News with Aaron Young, this is Ticker Today.
Hello, thanks so much for joining me. Billions are set to be wiped from the ASX as the week now kicks off following President Trump's latest tariff announcement. Investors bracing for a sharp fall, with ASX futures pointing to a slide of over 330 points, equating to a massive $115 billion hit. On the markets, Wall Street tumbled as China responded to Trump's tariffs, heightening fears of an all-out global trade war. Professor Tim Harcourt will join us shortly to unpack all of the implications. China has unveiled extensive countermeasures, meanwhile, against the United States in response to Trump's new tariffs, intensifying frictions between the world's largest economies. Protests have broken out across the US as demonstrators denounce the Trump administration's policies, accusing them of favouring the wealthy over everyday Americans. And Australian Liberal leader Peter Dutton has backtracked on his contentious plan to force public servants back to the office full-time as the election now enters into its third week. This is Ticker Today, the latest news, business and tech shaping the world. Let's get started. First today, billions poised to vanish from the ASX as the week begins following President Trump's tariff announcement. Investors bracing for a steep decline, with ASX futures suggesting a drop of over 330 points, translating to a staggering $115 billion loss. The turmoil comes after significant sell-offs in US markets as fears of a global trade war now escalate, notably following China's retaliatory tariffs. More on that in a moment. The Aussie dollar hit a 5-year low, now flirting with just 60 US cents. Analysts warn that while direct impacts may be minimal, the second-order effects on Australia's economy could be substantial as global trading partners react to the new tariffs. China announcing sweeping retaliatory measures against the US following President Trump's new tariffs, escalating tensions between the world's largest economies. Beijing imposing heavy tariffs on US imports and restricting key exports, promising further action to defend its interests.
China is hitting back at the United States with new tariffs and export controls on rare earths, following President Trump's sharp increase in duties on Chinese products. Beijing announced a 34% tariff on all U.S. imports starting April 10th, matching Trump's latest tariffs. Additionally, exports of 7 types of rare earths will be immediately restricted. Chinese authorities have pledged resolute measures to protect their sovereignty and economy. Trump's tariffs, the steepest in a century, are expected to impact nearly all Chinese products entering the U.S. Both sides remain defiant, with Trump declaring the conflict an economic revolution and promising victory. Global markets have continued to slump amid the intensifying trade war, with neither country showing signs of backing down.
Protests erupted across the United States as demonstrators rallied against the Trump administration's policies, which they claim favour the wealthy over working Americans. The demonstrations, organised by unions and progressive groups, aim to protect essential social programs like Social Security and Medicaid.
Mass protests took place across the United States opposing the Trump administration's policies that critics say benefit billionaires while undermining essential social programs. Demonstrators carried signs reading "Democracy, not dictatorship" and "Hands off" as they called for the protection of Social Security, Medicaid, and federal workers. Protesters, including longtime activists and families, gathered in cities like Washington, Boston, and Atlanta. The rallies also took place in traditionally conservative areas, highlighting widespread concern. The protests follow President Trump's recent move to cut government spending, appointing Elon Musk to lead the effort. Musk's actions have faced legal challenges, particularly regarding access to sensitive data. Trump defended his policies, promising to protect social safety nets, despite fears that cuts will damage public services.
Australian Liberal leader Peter Dutton has reversed his controversial plan to require public servants to return to the office full-time. Facing backlash over polling data highlighting the negative impacts on families, he's acknowledged the need for flexibility in working arrangements. While the policy shift allows continued remote work, the coalition still plans to reduce public service staff by 41,000 through hiring freezes and natural attrition. Critics, including the Prime Minister Anthony Albanese, argued that Dutton's earlier proposals could have harmed families, particularly women who rely on the benefits of working from home. A deal to divest TikTok's US assets is currently stalled after China raised objections tied to recent US tariffs. President Trump extending the deadline for ByteDance, which is TikTok's parent company, to comply, pushing it to mid-June. The agreement has aimed to set up a US-based company with a majority of American investors, while limiting ByteDance's stake to under 20%. Despite approval from American investors and the government, China hasn't committed to the necessary approvals for the sale. Ongoing discussions highlighting the complexities of US-China relations and the future of TikTok in the American market. And as we mentioned at the start of the program, Australian shareholders now bracing for a staggering $115 billion loss as global markets plunge into bear territory amid escalating trade tensions. The Australian dollar dropped below 60 US cents following China's retaliatory tariffs, hitting local investors really hard. Analysts foresee potential interest rate cuts with predictions of a May reduction now on the table. And US markets plunged Friday as China retaliated against Trump's tariffs, sparking fears of a global trade war. The Dow fell over 2,200 points, the S&P 500 and the Nasdaq also suffering historic losses.
Wall Street experienced its worst two-day sell-off since the COVID-19 pandemic as China retaliated against President Trump's tariffs. The Dow plummeted 2,231 points Friday, its biggest drop since June 2020, while the S&P 500 fell nearly 6%, marking its worst week since early 2020. The Nasdaq Composite slipped 5.8%, entering bear market territory with a 22% decline from its December peak. Technology giants like Apple, Nvidia, and Tesla took heavy hits due to their exposure to China. Meanwhile, Beijing added firms to its unreliable entities list and launched an antitrust investigation into DuPont, sending shares down nearly 13%. Investors rushed to bonds for safety, pushing the 10-year Treasury yield below 4%. Trump remains defiant, promising his trade policies won't change.
Bitcoin has seen a notable dip of 5%, now sitting at $78,892 US. The decline reflects ongoing volatility in the crypto market. Meanwhile, Ether, which is the second largest digital currency, has plummeted by approximately 9.6%, currently valued at $1,617. The shifts come as investors react to changing market conditions.